HMRC will be targeting personal expenditure in business accounts with a new digital campaign and will make more inquiries. It wants clear, consistent apportionment and strong records. You should review your accounts before submitting your tax return if needed. HMRC ran a successful 2024 trial, which raised over £27 million and proved that private costs can creep into business claims. The new digital campaign means more nudges, more checks, and more inquiries for sole traders, partners, and landlords who blur the line between personal and business expenditure. The core rules have not changed. An expense must be incurred wholly and exclusively for it to be deductible. Where there's a clear business element within a mixed cost, that business portion can still be claimed, provided the apportionment is fair, backed by evidence, and applied consistently year on year. What HMRC wants to see is simple, reliable proof. Mileage logs that reconcile to journeys, phone bills split on a sensible basis, and home office claims that reflect actual business use across the tax year. When HMRC targets personal expenditure, weak records are the first domino to fall, so contemporaneous notes and receipts matter. It also pays to remember that routine repairs to premises are generally allowable, but improvements are capital and must be excluded from revenue deductions. For plant and machinery, capital allowances may be okay, but personal use of assets such as vehicles requires a restriction so that only the business element attracts relief. Don't forget flat rates. Some taxpayers may prefer the simplified expenses route for vehicles, home working, and private use of business premises. The flat rates are designed to be practical, reduce judgment calls, and lower inquiry risk when used consistently and supported by basic records. I strongly recommend you review your 2024-25 returns with fresh eyes and revisit earlier years if necessary. If a method of apportionment has drifted, or if evidence is light, tightening the approach now is wise, especially as HMRC targets personal expenditure with data-led prompts and follow-up inquiries. Typical flashpoints include motoring, phones and broadband, use of the home, mixed-purpose travel, and property-related costs. The question is not whether an item has any personal benefit, but whether the business part can be identified, measured, and defended. A credible, repeatable method, explained in working papers, goes a long way. This is not about disallowing genuine business costs. It is about clarity. Anyone who shows how a claim was calculated, why the basis is reasonable, and how it has been applied over time will usually be on firm ground. In contrast, round-sum estimates without evidence invite challenge when HMRC targets personal expenditure in routine risk reviews. The message from HMRC is friendly but firm. Claim what is due, prove it sensibly, and keep the approach steady from one year to the next. That blend of accuracy and evidence is precisely what HMRC's personal expenditure campaign is designed to test. Well-prepared taxpayers can readily demonstrate all of their claims. If anything I've written in my blog post resonates with you, and you'd like to discover more of my thoughts about HMRC targeting personal expenditure in tax returns, then do call me on 01908 774320, and let's see how I can help you. Don't forget to stay updated with our daily social media posts on Facebook.